Hello. In this video, we will see a very important topic in finance and markets, and it's perhaps very relevant in the present time because we're going through a very unprecedented time. We're going through a crisis. It's a crisis of a different nature. It's not a financial crisis yet, but it's even bigger than that. The impact is bigger than that, fueled by the coronavirus pandemic. And because of the shutdown, the economies across the world are suffering. However, the market is doing well. Stocks are doing wonderfully well. Many of the tech stocks are doing superbly well. In fact, some of them um, are doing some extremely well, something that even is not expected even in normal time, in a good time, but even in the bad times they're doing so well. So what's the reason behind it? Is there a reason behind it, or is there going to be a bubble, stock market bubble, like we had, dot-com crisis in 2000, Asian crisis and other such crises? Will there be a crash? Well, we'll see that. But look at, I've just opened Yahoo Finance, and you can also see by yourself that Tesla's market share. I've just opened Tesla's stock price and movement in the last 12 months. It's currently trading at 844, and it was less than 300 last year. So it has increased. The market price has increased by way more than like couple of 100% is, right? That's unbelievable, right? What has really happened in the last 1 year that that justifies such a that justifies such a large increase in the share price for Tesla? Well, Tesla is more profitable right now. That's fine, but its market value is now more than double of the next in the line, which is Toyota. So, an year back, Toyota was the biggest car maker in the world, most valued company, automaker in the world. But now it's Tesla, and its market value is actually more than double that of Tesla, that of Toyota. That's unbelievable, right? So, if you actually see the more fundamentals of the company, be it beta or be its P ratio, not very impressive, right? And look at the profitability of it. It's not that profitable. In fact, you probably have the revenue and profit figures as well. Very low earning per share. Not that great, frankly, but investors are ready to buy it at premium. And what's the reason behind it? And it's probably because they see that tech will disrupt this sector, and Tesla is at the forefront of tech revolution in the automobile industry. It's also happening in other industries, right? So question is, are we going through a very difficult and very interesting time, which could be even more difficult in future for the ones who are actually so optimistic about the stock market? It could be that they will be losing money in the market because there is no underlying reason as to why stock prices should do so well. And there's an analysis, there's a video by Financial Times. It's a leading newspaper on finance and economics, and we'll watch this video as to, is it going to be a market bubble? Are we in a stock market bubble? Will it burst in the future? So let's watch it, and please let me know your opinion in the
comments. One of the
comments.
tricky things about asset bubbles is that they cannot be conclusively identified while they still exist. Only once a bubble has popped can we be sure that it was ever there at all. There are, however, two necessary, if not sufficient, conditions for the existence of a bubble. The first is an accelerating increase in prices that forces valuations near historical highs. The second is increasingly speculative and insane behavior among investors.
So that's one thing to note here: speculative behavior. So people speculate that stock prices will go up, the value of the company will go up, but that is not supported by the underlying, you know, economic reason. right? There's no profit. Tesla is not making any profit. Well, very little. Many of the tech stocks, tech companies are not making a lot of profit, but yet the stock prices keep going up. So he's just explaining as to why.
In the US stock market, we clearly have that first box ticked. Here is the NASDAQ index, which is heavily weighted towards technology, the sector where valuations have been the frothiest. It has risen 40% this year, despite the small matter of a global pandemic and an accompanying weak economy. Crazy behavior? There's plenty of that going around too. Perhaps the ripest example of investor insanity is a barely profitable electric car company that has seen its share price octuple this year. Here is a chart of Tesla shares. There was a 2-day period a couple of weeks ago in which Tesla added the entire market value of the Ford Motor Company twice over. Or how about the rocketing price of an asset that, depending who you talk to, may have no underlying value at all? The cryptocurrency, Bitcoin. Now, the argument that there is not a bubble in the American stock market is that stocks have to be so expensive because government bond yields are so low. That is to say, while stock prices are high, the premium that investors receive for owning stocks as opposed to bonds is actually at the low end of the historical range. Here is a chart of the 10-year inflation-adjusted or real yield. The great investor Jeremy Grantham says that justifying the high prices of stocks by pointing to historically low bond yields is nothing more than justifying one asset bubble by reference to another. He may have a point, but the fact remains that the Federal Reserve can keep bond yields low simply by buying more and more treasuries. That is, unless inflation spikes and the situation gets out of the Fed's control. The question of whether we have an asset bubble in the US stock market is nothing more or less than the question of whether we have been too complacent about the possibility of inflation. If you own stocks, keep a close eye on the prices of everything else.
I think his last message is that if you own stocks, then keep an eye on the prices and the movements, especially if you're a retail investor and if you are not that wealthy, earn your money through hard work. It's very important to not, be complacent about the stock market, especially the fact that it's doing so well now. You have to keep an eye on the movement of the prices, and if things go wrong, make sure that you liquidate your assets, your stock, your equity assets, as soon as possible. Otherwise you will be losing a lot of money. So very important message. So I'm glad that we have learned something from it, and if in case you disagree with this, you can comment below in this video. Thank you.